Hi everyone. Today, let's talk about the NASDAQ. This is the monthly chart for the NASDAQ index, and as you can see, it's been a pretty bumpy ride. And with this recent downturn over the past several months, this is not a unique time, and I certainly want to give a little bit of perspective here because sometimes it's tough to be a trader and tough to be in the markets. We'll also take a look at government bonds as well as a couple of different indicators for where I think the markets are going, specifically related to the NASDAQ. And as you can see here, Papa Powell is now very concerned about inflation, drastically changing his tune from saying inflation is transitory and moving to a 25 basis point hike periodically to now saying that a 50 basis point hike is certainly possible in the near term, happening as soon as May. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this as well as whole portfolio overviews every single week. So make sure you hit the bell so you don't miss out on any future content. Welcome to the Portfolio Bulletin. Let's get started. I want to start off by saying this is a tough market. Don't get discouraged just because you lost money. Everybody lost money unless you were bearish on the market and already set up short going into these last few days of the week. But this was a pretty rough week. It's really been a pretty rough year for the NASDAQ specifically. This is the S&P 500 heat map, and there's really only a few bright spots in terms of stocks that were green. And you can see those here with Twitter, Kimberly-Clark, SLB, and Lockheed Martin, as well as Northrop Grumman. Not a lot of stocks to pick from that are going up, and that's okay. Sometimes the market's going to go down, and you just have to stick with it, and generally stocks will go up over time. Papa Powell says it's absolutely essential to tame inflation and has gotten significantly more hawkish, saying that a 50 basis point hike in May is possible. They are potentially raising rates expeditiously to bring down inflation, which is in an attempt to slow down the rising prices, which are at their fastest pace in 40 years. He said, "It's appropriate in my view to be moving a little bit more quickly." This clearly spooked the market, resulting in the down moves that we saw over the last 2 days, which were pretty aggressive. This is a departure from the statement where he said we were going to move in 25 basis point hikes and move that over time to moving at a much faster pace. They say expectations for a 50-point move in May rose to 97% after his statement. So you can expect that the market is going to factor that in significantly more strongly than it was previously, which caused all of the major indices to move down, with the Dow moving down 400 points, as well as the NASDAQ moving down more than 2%. And it's clear that the NASDAQ is pretty sensitive to these rate hikes because it is more growth and more tech-centric. And then we'll talk about Treasury yields a little bit later, but they reached around 2.9% as a result of these statements. In March, they agreed to raise the base rate 25 basis points, but recently officials have become significantly more hawkish. This is because the inflation rate has raised to around 8.5%, and their goal is certainly to stem inflation, potentially even if it risks the rest of the market or the economy. Papa Powell then said he's going to use his tools to get demand and supply back in sync, because right now supply is not keeping up with demand, which is causing this inflation. He continues to say that this is going to be very challenging, but they're going to accomplish that task. He further said it's absolutely essential to restore price stability, and economies don't work without price stability. This is a significant shift from his priorities for full employment and not worrying too much about inflation to worrying basically exclusively about inflation, which is going to punish the markets. So definitely keep this in mind as you continue to invest or trade in the short term. They talk further about that transition, saying that they used to say inflation was transitory, but now it's significantly more painful. Papa Powell mentioned that he is disappointed and that the Fed had to change course. The Fed is also starting to sell more of their money, allowing billions of matured bonds to roll off their balance sheet every month, which is also driving up the 10-year yield because they're not buying these bonds as aggressively, and the Fed was always the biggest buyer of these bonds. They say the U.S. economy is very strong, and the labor market is also extremely tight, historically so. So he met his intent of getting full employment, probably more than what he expected, and now they're refocusing on the taming of inflation. Moving over to the 10-year yield chart, I also have the NASDAQ put on this chart, so you can see the NASDAQ is a percentage chart on here in orange versus the 10-year yield. So the 10-year yield started rising pretty aggressively from around 7 March, and since then, we've had a pretty aggressive move up. And the NASDAQ has been fairly stable in that first move up, but since then it's dropped pretty aggressively. And this is the daily chart, so you can see here on 5 April, we have this really strong candle up, which really starts this downtrend here in the NASDAQ. And then as the yield continued to rise above this level of resistance and staying on this really aggressive slope, the Nasdaq has basically moved down continuously with a few days of flat sideways movement and then a continued move down. You could maybe argue that the last couple of days here with the 10-year yield indicated a potential short-term down move, but with the new comments from the Federal Reserve, that seems less likely, and we should expect that this is going to continue higher. Moving over here to the Nasdaq Pure Chart, this is the 1-month chart, and anytime we get pretty significant down moves, I find it important to look at the more historical charts, the longer-term charts, to see where we are potentially in a cycle or where we can expect to get some long-term support. So on the 1-month chart, going all the way back here to 1986, you can see what this trend looks like. Here you have the dot-com bubble. If you're not familiar with this chart, huge ramp up, huge crash down, putting you in this lower range, which we don't really stay in very often. Had a nice move down here in 2008 with the financial crisis, re-hitting this bottom, which was established long ago, stopping right there and then continuing higher for the long term. Now we've exceeded this middle range into this upper range, which we hadn't been in since 1998, and then we came out of here in 2001. And now it seems like we're going to fall out of this range once again, or at the very least retest support somewhere around here. So if we zoom in here to the 1-week view, there's definitely some downside potential, somewhere around 8 more percentage points until we hit that support level. And if this breaks, it could be a long way down. Next level of support from there is about another 50% down move. I'm not sure that that's going to happen. I think there's some pretty decent support levels in here. We have the highs here in 2020, which certainly could act as a decent level of support. These companies here in the Nasdaq have grown pretty significantly, in my opinion, from 2020, and it seems more likely that we'll find support somewhere in here at the 144 EMA, which is just about at the same level as this level of support. And looking back here, you can see this level was generated during the dot-com bubble. Pretty significant reactions here in 1998, again here in 2001. And then that's basically right where we stopped at the start of COVID. We then bounced and then pushed right through that level. You can certainly argue that there was some decent interactions here, a couple of touch points before we found some support and then pushed up through with a pretty dramatic up move. Came back and retested here in July and then continued up higher. It seems like we're moving back into at least a retest of that level, another 8% down or so. Again, this is the Nasdaq chart specifically, and if you're trading the QQQs, it tends to move a little bit lower than the Nasdaq. So on the Qs, that could be even lower, potentially around 10 to 12% lower than where we are now. If you're looking for some winners in the markets right now, SLB was one of those ones I mentioned earlier that's doing fairly well. This is a stock I've traded in the past. It's currently at resistance, but seems to be channeling along pretty well. Here on the weekly chart, not a great risk reward where we are right now, but could certainly head higher. And here we have SPHD, which is a high dividend, low volatility ETF, which is generally outperforming the markets right now. You can see it's been moving up pretty significantly and only moved down slightly here in the last week. It certainly hasn't had the bull run that the rest of the markets have. Here on the weekly chart, you can see it's been basically flat here through 2017 to 2020. Still had that big move down for COVID like everything else, and then rallied up to new highs. Since then, it's basically been sideways, whereas the rest of the market is significantly higher. Although now, it might be a time to rotate into a stock like this, which tends to stay more stable and pay out higher dividends, where the rest of the market could be falling significantly further. And if you're looking for a place to invest money outside of the markets and in real estate, definitely check out Fundrise. If you watch my channel, I'm a big fan of Fundrise and a big fan of real estate in this current inflationary environment. I'll put a link above here for my last Fundrise video. Definitely check that out. If you're looking for a place to invest money, and they outperformed all of the markets over the last quarter by 8%. Again, check out that video if you're interested in Fundrise, and definitely use the link in the description if you choose to sign up with Fundrise. Really helps out the channel, and it gets you some free cash when you sign up. Hopefully this video gave you a little bit of perspective over the last couple of weeks or months in the market, and a couple of possible places to continue to invest during this market down cycle. Let me know down in the comments what you think of this video, or where the market is going next, and where you're investing money right now. Like and subscribe if you got any value out of this video. It really helps spread this channel to more people, and hopefully we can all make a little money together. Of course, none of this is financial advice. This is all for entertainment purposes, and have a great day.